Welcome to another in our series of Making Tax Digital. I'm Derek Williamson of Goddards Accountants, a forensic accountant and also author now, of course, of Simple Going for Growth, and equally important, our new book, Key Performance Indicators, which hopefully will be hitting the high street in mid-June. Right, today's subject is making tax digital. And why is it doing this? Well, they think that manual recording and collection is inefficient. They think that they're being robbed of about £10 billion, and they think that these changes will reduce the gap by 1.2 billion. What they're forgetting is the cost to you and I as businesses. So, the FASB's concerns on this was that, first of all, was it giving you enough time? Well, it's now been delayed until 2019, and only those that have to be registered now have to be registered. We'll come on to that less later. It has the potential of helping small businesses because effectively by forcing you to computerize your system, it should be tightening the control on your business and therefore ensuring that you are compliant, because of course the Companies Act require all limited companies to keep proper books of account, and HMRC's Taxes Acts state that every business must keep proper books of account. So, what is MTD? It's a program that will affect every business and individuals over the next 5 years. The theory is that it will reduce the gap in administrative burden on HMRC. They say businesses and individuals. The truth is it might reduce the burden on them, but it will put that work on individuals and businesses. Phase 1 is VAT, and that will then be followed by phases 2 and 3. Phase 2 will be corporation tax, but as you can see, not until after April 2020. And phase 3 will be income tax, which nobody's quite sure when that will happen, because at the moment it doesn't work. So if you are registered for VAT with a taxable turnover up over 85,000, you will be required to submit your VAT returns digitally from this month. And they've got to be filed by functionally compatible software. Awful expression, but it just means that this is the software that the revenue like. I mentioned the 85,000, and it will be the first quarter that you have ending. So when did your period end? And so when will you be liable? The daft thing here is that if you voluntarily registered or voluntarily register going forward, you will not be required to file under MTD until you exceed the VAT registration threshold or volunteer to make your returns electronically. However, once you have made such an election, you will then not be able to reverse that and go back to doing them manually. So just bear that in mind. So what's not changing? The date you've got to return your VAT, the date you've got to pay it, your eligibility for special schemes, and surprise, the VAT returns still consist of the same 9 boxes that are currently completed. However, as you can see, Plymouth Brethren are exempted because they believe it to be religiously and morally wrong. Also, if you happen to be living in the middle of nowhere and you do not have access to the internet, and you can prove it to HMRC, you will also be exempt. Having said that, the HMRC are making it nigh on impossible for anybody or everybody to be able to claim exemption. So don't waste your time. So, again, when you need to be ready, if you're a limited company or sole trader with your turnover over 85,000, it's your first return after the 1st of April. If you're a trust, a not-for-profit organisation, or a VAT group, it will be October 2019. And as I say, the exemptions, is it your age, disability, remoteness, or location, etc., that justifies you not being registered? I repeat, the chances of you getting away with it are very, very slim, unless you happen to be sitting, I was going to say, on the top of Snowdon. That's a bad one because they do actually have the internet there. But if you were sitting on the top of the Cairngorms, you might get away with it. So, your first return is determined by your quarter date. So if your accounting period, VAT period, was the 31st of March, you will not be eligible until you do the June quarter, which means that you do it in July and pay your VAT in the first week of August. Even if you're using a current gateway, and many of you will be, you must register with HMRC for making tax digital. In short, you need a new portal. And once you've signed up, you must then submit all future VAT returns through the portal, and the old gateway will therefore be closed to you. Therefore, do not register until you've submitted your last non-MTD return, and then wait a further 5 days for the payment to be made. Fortunately, the system is already working, so if in fact you do sign up, don't worry, it just means that effectively you're going to have to file through the new portal. So what do you need to do? Well, first of all is review your current VAT process. Is it an ad listing? And believe it or not, there are still many people who are using ad listing for their VAT returns. Is your current software making tax digital compliant? If it's not, then consider upgrading or obtaining new software. HMRC have actually listed all the providers. We work with Xero, QuickBooks, Free Agent, Cashflow, and Sage. And there is also now some software, if you're using an Excel spreadsheet, there is some software that you can use that you dump your data from Excel into that, and it then puts it into the portal. So again, key question here is, are you ready? Are you using the right software? If you're not, the revenue don't care, because they're going to fine you. Do you really want to be fined? So, key question here is functional compatible software. The truth is that the revenue will be able to go behind that data back to your source document. In short, they'll be able to see if you're cooking the books. The other thing is, under the old method, you might have done your VAT figures and then thought, oh, I've got them wrong. So you went in and did some amendments and then filed it. All the revenue you ever saw was the filing. Under the new system, if you make any amendments, it tells the revenue that you've done that. It doesn't tell them what they are, just says you've done some. So that's what the revenue will be doing, is looking at those firms to see were they genuine amendments or were they cooking the books. Again, if you're using something like Excel, you must use bridging software. It's as expensive, to be perfectly honest, as buying QuickBooks or Sage or, sorry, not Sage, QuickBooks or Xero or Free Agent or Cashflow. So on that basis, you might just as well go and buy the software. That way, get the revenue out of your hair. Where we do have one or two clients who are using spreadsheets, we use Zoho. It's a very good program. So again, if that's what you're using, we'll use Zoho and get your Excel stuff into HMRC. Right, digital records. Let's look at this. You've got to be doing digitally generated invoices or paper invoices where the information is digitally captured and entered into a software package or Excel spreadsheet. To be perfectly honest, most of these packages now will do the invoices for you, and it's cheaper than messing around putting it in 2 or 3 times. You can continue to issue paper invoices, but the invoice details must be entered onto your software package. We use QuickBooks. For many of our clients, we send them a paper invoice, but the software allows us to send electronic invoices should the client so wish, which they can then immediately dump straight into their accounting package. You must note that you will no longer be able to maintain your business records purely in manuscript format. That is very important. And there are certain records that you must be keeping. Your business name, address, principal place of business, VAT registration number, and any VAT accounting systems in use. You must record each supply made, namely sales and purchases, detailing date of supply, net value, and the VAT. That is very important because a lot of businesses will take all the bills that they get and staple them to the back of the statement and then post the statement. That you will no longer be allowed to do. From the 1st of April, every single one of those invoices must be entered onto the system. We use Receipts Bank to do that, and we would recommend that you do that. Equally, you can't do a statement to a customer. You must do PACA sales invoices. If you don't, you will get a penalty. And if you're in a retail environment, you must retain a record of transactions on a daily basis, not weekly or monthly. You may be surprised at that, but we historically have had many clients who have been giving us either weekly or monthly sales records from the till. That is no longer allowed and will be subject to penalties if you are stupid enough to continue doing that. And again, HMRC have confirmed that a point-based penalty system will be applied. Surprise, surprise. Nobody knows how it's going to work, but they are basically giving us a year to become compliant. Deliberate non-compliance will be tackled by the revenue. And as I say, it can be expected the current VAT review processes will continue, but the reality is that if you've made any adjustments, you can be pretty certain that that will put you at the top of the list. If you're a not-for-profit organisation, a group or a trust, local authorities, public corporations and traders based overseas, everything is put back until 1st of October. Fortunately, none of our clients are in those categories, but again, if you know anyone who is, they do have an extra 6 months. And again, going back to the exemption, we did mention this before, Plymouth Brethren, reason of age, disability, remoteness, etc. And please bear in mind, businesses subject to insolvency procedures do not have to use MTD. But again, that's a little privilege for insolvency practitioners, but there's a very good reason, because to be perfectly honest, for them trying to get the data together is very, very difficult. As the laws wanted to defer MTD, for a year, having already had it deferred for 1 year, but it was decided that it will not be delayed, and so anybody doing a return for April has got basically until the 5th of May to complete that return. If they don't complete it using the new software, I can tell you now that the revenue will be in touch, finding out why, basically warning them they've got to comply when they do the next return. Brexit seems to rear its head everywhere. The truth is that it's not going to affect MTD at all. Unless, of course, you are doing major exports to Europe, but the only change there is that once we leave, if you are selling to companies in Europe that are VAT registered, you will then, instead of getting their VAT number and not charging them VAT, or if they don't give you a VAT number, charging them VAT, anybody in Europe, once we do leave, if we leave, you will be treating them as an export, so they will be zero rated. And surprise, surprise, HMRC does not recommend or endorse any software package. Why are we not surprised? They're always very difficult. So, the rules apply for your first full VAT period beginning on or after 1st of April 2019. So you need to bear that in mind. Review your current systems now. I do notice that I've got 2 people who are on the live webinar at the moment, both of whom are using MTD Compliance software, so that's not a problem. And for anybody else who'll be viewing this later on when we send it out on the internet, research and implement your changes in good time and be prepared. Thank you for listening. If you've got any questions, give us a ring on 020-8941-2187. Thank you for listening, and I look forward to hearing from you. Thank you and goodbye.